One of the strongest criticisms of the new Canada-U.S. trade deal revolves around the so-called non-market economy clause. Critics see it as a U.S. veto on Canada's ability to sign any trade deal with China. Here's why. Clause 32 includes something called non-market country free trade agreements. 3 countries fall in that category: Vietnam, North Korea, and China. The clause says that if Canada were to start talks towards a free trade agreement with China, it needs to notify the U.S. and Mexico at least 3 months prior, and Canada must provide as much information as possible regarding the objectives. And if they do reach a deal, Canada will provide the U.S. and Mexico with the full text of the agreement no later than 30 days before the date of signature. Finally, if the U.S. or Mexico doesn't like what it sees, they can terminate the USMCA within 6 months. The U.S. has fired other shots across China's bow in recent weeks through billions of dollars in tariffs and by tightening rules that target Chinese investment. But America's loss in Chinese business or investment could be Canada's gain, according to some in the auto industry. And joining me now from Toronto is Flavio Volpe. He's the president of the Automotive Parts Manufacturers Association. Hi, Mr. Volpe. Great to see you.
Thanks for having me.
So let me start at the beginning. I understand that you think that the U.S. trade war with China could push Chinese automakers to invest in Canada. Why do you think that?
Well, I think the Chinese automakers now are at the point where they're making as many cars as the biggest automakers in the world. Shanghai Auto, Guangzhou Auto, Beijing Auto. They make as many cars as Ford and Honda and Chrysler. And the only market that they're not present in is the U.S. And that's the key market for every automaker at some point in their maturity. The U.S. has imposed tariffs on China. It's also their investment review process is focused on China. And I think if those companies want to sell cars to consumers in New York and Illinois and California, Canada's a great place to do it.
Have you seen any evidence that there is interest to do that, or is it too early based on, the U.S. has obviously been very aggressive towards China, but is it too early to tell if that's going to generate a push towards Canada?
Look, I talk to these companies on a regular basis, and I talk to them both from a market access point of view and then from a supply management point of view, supplies, whether it's parts or whether it's raw materials. And we always talk about entry points. Several of these companies are already talking to or in the middle of making distribution agreements with dealerships and dealership networks across the U.S. Now the question is, now that the U.S. has imposed serious tariffs on products that come in across the Pacific, but also concluded this agreement with Canada and Mexico that allows for a growth in the amount of exports that come from Canada, the discussions as late as this week have turned to should we consider a different model, one that supplies from here?
What kind of potential business is there? Like, if you're trying to quantify, what does this mean for Canadian manufacturers?
So an auto assembly plant is a $2 billion investment that then buys about $10 billion worth of parts a year. And so if a plant ended up in Michigan, I think that Ontario-based automotive suppliers might have a $2 or $3 billion business a year with it. If it landed on the Ontario side, I think that number might be $4 billion a year. It is a very, very serious increase.
And yeah, that's a big difference.
Yeah, that's right.
So you say that the talks have just recently turned. Is there an onus on Canada or Canadian businesses or the government here to then try and encourage that, or to provide an environment in which that actually does happen? What needs to happen on this side of the border?
Well, I think the government ideally creates an environment where that is a valuable proposition for companies. I think they've done that. Certainly there's a role for them to play a little further down the maturity of that discussion, but it's really up to us in the private sector to say, look, you can get your materials here, you can get your skilled workers here, you have support of the post-secondary institutions, both for training and retraining and for specializations. And by the way, you can get everything you need in the automotive value chain from Windsor to Toronto. And we're in the middle of making that case. We have been over several years, but really with some intensity over the last year or so.
How delicately does Canada need to tread here? And I ask because, of course, there's been so much conversation lately and focus on the non-market clause in the new NAFTA or USMCA, in which basically, if we were to pursue anything formally free trade with China, the U.S. effectively, some critics say, would almost have a veto. Clearly, and we've heard from some politicians there and advisors to the president, this is a poison pill. They're trying to send a message on behalf of not just the U.S., but Canada and Mexico as well towards China. Does that mean that we have to tread lightly when we talk about encouraging Chinese investment here?
Well, I think that what we need to do is be careful. Over the last, a couple of years ago, we started talking to China about a free trade agreement. What we said from the industry was, let's have a discussion about a trade agreement. They need access to potash and petroleum, they said so. And we said, well, why don't we try to attract their automotive investments here in exchange, rather than traditional free trade agreement. I think now, if private industry, speaking of private industry, whether they're state-owned or not, makes the case and makes the deal, I think that's the best way to go. I'm not sure that Canada, Team Canada, should be chasing these investments. When we get them to the point of maturity, the regular government cooperation and co-investment at the end might be necessary. But frankly, I think as long as it's industry-led, we might be able to draw in the biggest growth opportunity in our industry in this country since Toyota opened up another plant in Woodstock in 2007.
That's really interesting. So if I understand you correctly, you're saying sort of maybe it is time for the government to lay off a government-led sort of formal approach to an agreement with China and instead let private enterprise or the private sector embark on growing trade on their own.
Right. I think what the Americans are doing, and it's their choice. Certainly, they've got an ideology of being protectionist around the fortress, and they see China as their adversary. And so, investment review, tariffs, trying to encircle China by making trade agreements with its major trading partners. It's saying, look, from a state level point of view, we want you on side. But look, private capital, even protectionist agreements also say, if that capital is going to flow here directly, we'll accept it. And what we're going to make the case for is that with the new USMCA, we're inside the tent, and the terms that the government agreed to on automotive allow for growth, and this would be a great place to do it.
Is there a risk that we end up competing with Mexico for that kind of investment from China?
We always competed with Mexico for that type of investment, but Mexico agreed to a lower cap, a lower threshold after which their vehicles produced there would be subject to a tariff for import into the U.S. They're going to reach that cap with the commitments that have been made to date and the growth that's already scheduled. Canada, we've got room for 2.5, maybe 3 new auto plants. And so, based on that, if you're making a new investment that you want to sell mainly to, make product to sell mainly to American customers, you're going to do it in a place where you're not going to risk then tripping into a tariff after you've made the investment. Canada's the only place.
Okay, I'll leave it there. Thank you so much for your time, Mr. Volpe. Great to have you on.
Thank you for having me.